Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead.
LME 3-month copper. So what a difference a week makes. The big picture, longer term, shallow, bright red July 22 to October 23 bullish shift pitchfork has been breached and broken and will be retired after this commentary. A similar fate awaits the more recent dark blue late December 24 to start of February this year bullish Andrews pitchfork. Additionally, the idea of a mainly sideways market within what was at the time a very wide range of about 8,800 up to between the overhead congestion between 9751 to 9095 and a 2011 high at 10180, well, that is gone as well. However, it's worth pointing out that the whole move lower started when prices broke down through the dark blue lower tine in the middle of last week, the first time the market was really testing it. The big fall hesitated at the 50% Fibonacci line of the big October 2020 to May 23 move at 86.86, and despite dropping some $580 below it, we have not as yet seen a close below it. So that is where I'd keep a close eye upon from now onwards, as it looks like it might be the case, the base of action. The low itself was between the February 24 low at 81.27 and November 23 low at 80.18. It was also in between the purple neckline and November 23 to February 24 head and shoulders continuation pattern and the bright green neckline of the February to April 23 head and shoulders continuation pattern. I think the purple neckline is the more interesting of these two. So I will definitely retire the dark blue bullish Andrews pitchfork for next time, but for now I'll maintain the bright red bullish shift pitchfork on the daily chart, as there may be the opportunity to see prices run along the underside of the lower tine, which is currently at 88.99. Now, that's something I have seen markets do on occasion with pitchfork patterns. As for new patterns, I've drawn a new large September 24 to March 25 bearish Andrews pitchfork. It is not as yet highlighted, and the market's low has pierced the lower tine, currently at 82.42, but for now it will do. We're at this time in between the lower tine below and the middle tine above, which is currently at 91.69. Finally, I note how yesterday was a culmination of a 2-day bullish meeting lines pattern, and that is something to note for the next few days at least, that you have a bullish pattern here. LME 3-month aluminium. Sometimes the technical analysis on a market works really well, and sometimes it works wonderfully. This is one of those wonderful times. As I've stated here previously, there are a number of patterns here, one within another, all happening at the same time, all affecting the market, and most not working very well, and some I will retire. To start with, we have the bright red shallowly bullish shift pitchfork for the mid-December 23 to late July 24 move. We have recently seen prices starting to establish themselves over the middle tine, currently at 26.31. But as I said last week, and I quote, it was a tenuous hold over it, and prices dropped down through it and have remained below, pushing further down this week. However, this pattern still works, as the lower tine is currently 23.22. And that's the end of the quote. This is one to keep on this daily chart, as the low of the move has been right on the bright red lower tine yesterday. Additionally, nearby we have the bright green neckline, currently 23.52 of the October 22 to May 23 head and shoulders top, and the purple neckline, currently 23.60 of the March to May 2023 head and shoulders top. Both these have been pierced, but we have not as yet closed below either. Looking above, we now have quite a few supports that have become resistances. Some significant ones, perhaps previously mentioned here as such, are the April 2023 high at 24.62 and the 50% Fibonacci line of the December 23 to May 24 move at 24.54. You see, I did say 2 weeks ago, and I quote, in truth, I could see any significant move down carrying on until the 50% Fibonacci line of the December 23 to May 24 move at 24.54. End of quote. Now, the reason for this is that we were within the previously broken, then seemingly repaired, then finally broken, very shallow, dark blue bear channel, currently at 2443 to 2677. The top side had earlier been breached 7 weeks ago and also through most of March, but the moves on the upside had not been exploited, and thus we have seen the market turn and head lower, breaking through the lower bull channel line late last week. This break lower gave a primary target at 2317 and a secondary hard to reach target X at 2210. The low yesterday was at 2320, close enough for me to call the primary target reached. As for the secondary target X, well, I'm not sure about it, though it does complement the July 2024 low at 2209.5. I'll leave it on for a little while longer. LME 3-month lead. Wow, what a move here. The key features in this market, and some of them have been here for a while, still, even now, all relate to the very large descending triangle, possibly a descending wedge pattern, with an early July 24 to early March 25 purple broken downtrend, currently at 1981, and below with a bright red breached possible broken early August to late December 2024 head and shoulders neckline, currently at 1953, though it could also be the dark blue, also breached and possibly broken neckline extension, currently at 1903 of the July 23 to February 24 head and shoulders continuation pattern. 6 weeks ago, prices broke higher out of this pattern, and 3 weeks ago they broke higher still over the long moving average, currently at 2036. Back then, and again 2 weeks ago, they peaked at or just under the December 2024 high at 2103. In the process, the market made a small March-based double top pattern, even Adam type, closing below the neck of this pattern at 2015. Such a move gave us a primary target X2 down at 1966 zone, close to and just above the bright red neckline, as well as a secondary harder to achieve target target X3 down at 1926, close to the lows for this year. Now, this is all very well, but, and it is an important but I had previously had up 4 weeks prior some opportunities topside for the break higher out of the larger descending triangle come descending wedge pattern. In this pattern we had a primary target X up in the 2209 area with a secondary harder to reach target X1 further up in the 2320 area. I also saw the possibility for the action since the start of December last year to date making an ascending scallop pattern. This is the most important bit there. I even suggested last week that, and I quote, the market may try down towards the lower levels, but then turn and go for the topside targets. But I tend to favour the either or approach rather than this way. So it'll be topside or downside. End of quote. Okay, so we have created over March and very early April both an ascending scallop pattern and a double top pattern. Prices have also broke down through the bright red neckline and a dark blue neckline, plus both the primary targets X2 at 1966 and the hardest reach secondary target X3 at 1926 have been achieved. The move higher over March and early April can now be seen as a possible false break higher. And whilst we have had a big move lower, I would like to see some more action down here to confirm that this is also not a false break. Additionally, this leads me to suspend the primary target X topside at 2209 and also the harder to reach secondary target X1 at 2320. It also now allows me to set up some potential targets below for both the descending triangle and the descending wedge patterns. Hence for the descending triangle we have a primary target X4 down at 1812 and a secondary harder to reach target X5 all the way down at 1671. For the descending wedge pattern, we have a primary target X6 down at 1819 and a secondary harder to reach target X7 down all the way at 1612. Finally, and this is very compelling given recent events, let me once again make this point I have been making all this year, and I will continue to do so going forward. It has been and still is to me the most important point of all. So at the end of December last year, we saw that 2024 had created here a very rare pattern, an annual key reversal down in LME 3-month lead. Hence, as I've been saying for months, one should look at all things going forward this year in this metal as in the shadow of this bearish longer term pattern.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.